I think it's time for a little 5 Friday feedback viewer mailbag.
And guys, if you want to get featured on 5 Friday feedback, please go to FiGuys.com. On the top, there's a feedback tab. Click on that. You can write as much as you want to us. We select one a week that kind of makes sense for what we're talking about in the week. Please be as descriptive as you can. We've been getting a few that are just like, how do I do this? And
yeah, that's
be as descriptive as you can. This is obviously a podcasting for entertainment purposes, so we will keep you anonymous. But if you put more detail into it, I can give you more information. If you just say like, should I do a Roth or traditional? I'm not even going to put that question on here because I don't know anything about you, so I can't give you any advice there.
Yeah. Alrighty. With that being said, let's get into the viewer mailbag for today, for this week. Let's do it. 15,500 total income for 2023. Do I really owe 2,100 in self-employment taxes making this little? A little eye-catching. Howdy, Chris and Dom. Howdy. Howdy, Anonymous. I would love your advice on some of the challenges and experiences I've encountered on my new journey as a self-employed individual this year.
Awesome.
And I'm reaching out in the hope of gaining a better understanding of my tax situation. Cool. Came to the right place.
Yep.
Since January, I've been self-employed as an independent contractor, and it's my only source of income this year. Okay, good. To date, I've earned a total of $15,500, which includes my anticipated earnings through the end of the year. I've put my heart and soul into my one-person independent contracting business, and it's been immensely fulfilling to follow my passion. Okay. However, yeah, Chris likes that one. I like that one too. However, the financial reality has been quite different from what I initially expected. Recently, a friend of mine asked me about how my taxes worked, and I realized that I had no idea how to deal with taxes and the burden of self-employment individuals like myself.
Okay.
Yeah, we've all been there.
I was there.
We've literally all been there.
I was there.
Yep.
Yes, I was there.
Yep.
I know what this is like.
After some Googling.
Oh, good.
The mighty Google. It appears that I may be facing a 15% tax rate on my income, $2,100, even with a modest earning.
And that's $1,500, right?
15,000.
15,000.
15,000, okay. Yes. The realization has left me both puzzled and concerned. I'm not sure if I've understood this correctly, and I'm reaching out to seek clarity on why my tax burden seems so high. I mean, that is a sizable portion. Additionally, I've recently learned about a requirement for self-employed individuals to make an estimated quarterly tax payment throughout the year. Unfortunately, I wasn't aware of this obligation. As a result, I haven't been making these payments. The discovery has led to a pressing need to understand how I can rectify the situation and ensure that my financial affairs are in order. I've heard that the IRS can fine me, F-I-N-E, not fined, but they probably could too. I have heard that the IRS can fine me, and I want to make this right to fulfill my tax obligation. That's good.
Person.
Yeah, that's a good person. Do you have any guidance or support to better comprehend the tax obligation, why the tax burden seems substantial, and how I can go about making these payments? Any insights or advice you can provide would greatly be appreciated, and I'm committed to resolving these issues and ensuring that I'm in compliance with all tax regulations. My journey as a self-employed individual has been both rewarding and challenging, and I believe that with the understanding and assistance, I can navigate these fiscal complexities and continue to thrive in this self-employment adventure. Thank you for taking the time to read this letter. I hope you select this for the podcast. From an entrepreneur feeling lost in a maze, seeking clarity throughout their tax days. Very good. Very good.
Well, we did select you for the podcast.
I love it.
Congratulations.
Congratulations. Woo! Let's get into it.
No, we should definitely get into it. So there's 3 questions that were posed in this one. Mm-hmm. Number 1 is that actually correct? Do they owe $2,100, about $2,000? Do they have to make quarterly payments? Mm-hmm. And the third one is, if so, how do they do it?
Yes. So let's get into it.
Let's get into it. First things I want to say is congratulations on taking the plunge into self-employment. That is amazing. Dom and I are here right with you. We're all suffering together.
Yes.
It is.
We've literally been in your spot.
Yeah, I've been there. It's okay, and that's fine. It's totally fine. So have some fun. Another thing I always want to point out is I could really tell from the way you wrote this is that you really want to, you're taking ownership of the problem. You realize there's a problem. You're not saying, oh, woe is me, no one taught me about taxes. You're saying, I didn't know this was a problem. I did some Googling to try to figure it out. I want to make sure I'm right, and I want to get this done correctly because I don't want to deal with any fines. And it's my obligation as a citizen of the United States, which it is. 100% is.
Yeah, a great example for everyone, really.
So people who are taking ownership of their lives. These are the kind of people I love working with.
Exactly, those extreme ownership people.
So first, let's understand. Let's focus on understanding self-employment taxes. So number one, your first question is, do I actually owe $2,000 in tax liability? And to my estimation, yes, you do. You probably owe a little bit more than $2,000, probably around $2,200 to $2,300. So $2,200, $2,300. Majority of what that is FICA. So when you're a W-2, so for people who have a W-2 job, when they're an employee, they typically pay 7.65% of your income goes to FICA, which is Social Security and Medicare costs. Their employer will also put 6.75 into Social Security and Medicare, and their employer is actually holding that from the check. So before they even get the money, it's already being withdrawn from them so they don't end up getting messed up. Yeah. And then they're actually doing that over 24 paychecks, 26 paychecks, 52 paychecks, depending on how you're being paid. So your employer plus the employee yourself are putting about 15.3% is being sent to the government for FICA, Social Security and Medicare contributions. They're also, just to make sure that you're aware, they're also withholding your state and federal taxes. And you can kind of control that through the year by going in and changing the tax election as to how much to withhold. But when you're a self-employed person like you are, and like we are, your income is still subject to the same federal, state, local, and FICA taxes, but there's no regular paychecks that the government is aware of to take money from. Yep. So it's really on us to have to be in control of this and making sure that we're doing it. So this is the hard part, Dom, is, I understand where they're coming from, saying, well, I only made $15,000. It's not really fair that I'm going, I didn't make a lot of money, but I feel like I'm paying a lot of money in taxes.
$15,000 isn't a lot to make, but $2,000 is a lot to pay.
Yep.
For that much.
Yeah, no, I 100% get it. But remember that all of that, there's nothing you can do to hide from FICA.
No.
FICA, that's your Social Security, Medicare.
Hits everyone.
You can't go into HSAs, you can't put into traditional, you can't do anything like that. Whatever you make, you have to pay for that. But the good news is, in the future, you're going to be eligible for Social Security and Medicare, given that you fulfill your 40 quarters or 10 years of contributing into that. So it is a good thing. You want to be putting the max amount into that system because in the future, it's going to pay out more, ideally.
Yeah.
Given that it's still around. And that's a different discussion.
Yeah, that's where there are a lot of sub conversations we can have.
Yeah. So my guess is that what you Googled is correct, and you probably will pay that. Just remember that you don't have the regular withholding. So typically, had you made $15,000 originally, you wouldn't have brought in $15,000. It would have already been withheld. Quick note for self-employed people, though, you actually have the ability to write off the half of the money that is from the employer side that's going to FICA, so that you don't have to pay that in your income.
Could you explain that a little bit?
Yeah, for sure. So you can take a adjustment on your taxes for the employer half of the FICA tax income. So you still have to pay that entirely, but whatever the employer side had to pay, you actually get to deduct from your federal and state taxes. Does that make sense?
Yeah.
It's kind of a hard way to explain.
It's a little bit difficult. But
you try reading the IRS code and it's difficult.
Yeah, hopefully with the introduction of ChatGPT, I'd just be like, can you just summarize this?
Yeah, can you just tell me what this means?
Yeah.
Yeah. So depending on how much you paid through the year and how much I know when you're starting a business, there's always a bunch of upfront costs and you're paying for things, supplies, maybe you have an office,
website creation,
miles on your car, LLC formation, all that stuff. If you only made $15,500, if you have $3,000 in expenses anywhere for your business, I'm going to assume that you're going to have zero tax liability at all, federally or state. But you still have to pay the 15% FICA. because remember, it would normally be 7.5 from you and 7.5 from your employer, but now you're both the employee and the employer, so you're paying all 15% yourself.
Yeah.
Now let's get to question number 2 that you asked. What about making quarterly payments? So making estimated quarterly payments is how you keep from owing a large amount at one time. So essentially, you figure out what you think you're going to owe for the year, and you divide that up by 4. So you should pay 1/4 in April, 1/4 in June, 1/4 in September, and 1/4 in December or January. So instead of having to come up with, say, $2,000 at one time in January, you'll pay $5,000 or $500 4 times a year. And yes, the federal government, if you make over $10,000, they want you to make that quarterly, or there can be a fine. The good news for you is, since you didn't make a lot of money, I'm going to assume that your fee is probably going to be like $20, if there is a fee at all. So I'll get to that more in a second. So
I think it's really interesting though. So basically, how do they mind how much you're sending? Because like, let's say I'm not really sure like how much I make each quarter and how to calculate that. Does it matter if you send them how accurate does it have to be?
Dude, that's such a hard question.
That's tough because like at the end of the year, you're putting all your numbers into with your accountant or a software or something like that to really like get the true number. So it's like it's kind of a weird system, you know?
Let me give you a good rule of thumb.
Okay, cool.
So good rule of thumb is to set aside, on average, if you're earning more, about 28% or so from every job or payment you get, and put that into a high yield savings account and start making those quarterly payments. For my money, for that I have to pay for taxes, I actually put into my brokerage account and put into a money market account that's currently yielding 4.5%. So the money that I'm going to be paying in taxes, I'm making money on, knowing that it's going to have to go to Uncle Sam eventually.
So I'm just going to simplify that for the viewers. So from every dollar you make, we'll say every $100 you make, 28% of that,
$28.
or $28, you take out of your profit and you put it in an account for later, for tax time, or quarterly taxes, or whatever. And you put that in a money market account, or a high yield savings, basically the same thing. And while the money is in there, it's growing 5, 4.5, whatever the percentage is on it. So your money that is in your tax account that you're saving for later, it's no different than a savings account, just with a higher interest. It is growing. So when tax time comes, it's not like, because I think everybody's been there. Where it's like you've been hit with tax. You're like, what the? Why do I have to pay $1,000 in taxes? Where am I going to have this from?
Yeah, that's not fair.
It's not fair. It sucks. But it's your fault. So you got to take ownership, extreme ownership of it, and that's okay. Set some money aside. Chris does 28% because of his tax bracket. You can put whatever you want, but better to have more than less.
It is, and that's the reason that I put a higher amount. And I also want to make sure that you put it in a place that you will not have the
quick access
to, because you don't want to spend that money, because that money is not yours. It will go to Uncle Sam. And unfortunately, I've had a lot of people who come to me and they are like, I made all this money and now apparently I owe taxes. And it's like, well, where'd you put that money? And it's like, well, I spent it.
Yeah, think about it this way. If you had to pay the mafia every week or every quarter, right, taxes, and you put it in an account, you wouldn't touch that money, right? You wouldn't touch that money because they're going to come and break your legs, right? Think of it the same way. The government can come and take control over a big aspect of your life.
They'll garnish your wages.
They'll talk to your employer. It's credit score. It's just not good. Always just be in order with those people.
Yeah, exactly. You're exactly right. And then to our viewer, so for your $15,000, I would not be saving 28%. That's for my tax bracket. So for you, I'd probably be saving like 18 to 20% moving forward. And then depending on the state that you're in as well is going to also do that. For the 28%, that's just kind of a blanket over all states. And we're here in Arizona. We have lower taxes, but I still do that because the money's going into a money market account anyways. It's growing. So at least it's being invested. Either way, it's being invested. And then I use it as emergency savings if I need to have that as well. But everyone's a little bit different how they want to run that.
So is that for your state and federal?
What?
The money?
Yeah. The 28,000 is for my state, federal, FICA, all of it. I put it into one account. I don't.
You don't divvy it up or anything like that. Right?
No,
doesn't make sense.
It's going to make it complex, and there's no reason.
No, simplicity is the key. What you have a quote for simplicity, don't you?
Simplicity is the key to progress.
I like it. I like it. Yeah,
And then complexity is the enemy of progress.
yeah, there you go. There you go. I like that. Put that on a shirt.
Yeah.
I like that.
And then remember, because you're just starting out, you made $15,000 this year. You're going to be making more next year.
Yeah.
You know, from guys who started their own company, it takes time to build up. And once you hit that critical mass, it becomes like a flywheel where you're just like boom, 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 winning and winning, winning. So as you do that, you're going to have to adjust how much you're saving. So right now you might be saving 18%. Eventually you're going to have to get up to 28%. Shoot, if you get up into a higher tax bracket, you might be having to save like 32%. I don't know.
Yeah.
I save 28. I find that works for me, but everyone's a little bit different on what they do. That's something that me and my CPA worked out for ourselves.
Definitely.
And then let's see here. The third question you asked was, how do I actually pay the fees? Well, I have good news. It's actually really easy. Most government sites are god awful.
They're so bad.
So bad. But the IRS's website for making payments is actually really easy because the government wants your money, so they're going to make that easy for you.
Yeah, of course.
So what you're going to have to do is, we'll put this, you just write it down. You're going to go to irs.gov/payments. That's irs.gov/payments. You're going to click that you want to make a payment. And then there's going to be a drop-down bar that's going to ask you what payment do you want to make. You can make back taxes for the previous year. The one that you want to select is estimated payments. If you click estimated payments, in this year it'll say, do you want to pay estimated payments for 2023? You'll click yes. After that, you'll put in your name, social security number, your address, if your business has, and then if you have a S Corp or an LLC, if you want to put in your business tax ID number, you can. You don't have to though, because both of those are pass-through entities, so they go to your taxes anyways. Then you can either go with a credit card or a bank transfer. If you use a credit card or a debit card, there is a fee. I think it's like 2%. If you do a bank transfer, then it's going to be exactly what it is. Mm-hmm. So for you, what I would recommend, and the website again is super easy. Go inside there and try to make that $2,000 or $2,200, $2,300 payment before December or January of next year in order to, if there is a fee, and I don't know if there's going to be a fee or not, in order to lower that amount. But again, the fee, if there is, based off your income, is only going to be like $20.
Yeah,
I think.
And what if I overpay?
What if you overpay?
What if I overpay them?
The nice thing is the government will say, well, thank you, Dom, for your overpayment. And then when you
we built a road in your honor.
We built a road in your honor.
I want statues.
Good
I want
job.
roads. I want planes in my.
Where's
Where's my monument? I overpaid $20. Give me more statues.
Yeah. So, but at the end of the year, when you file your taxes, they will send you back the money saying, "Hey, you overpaid us. Here it is." But the sad part is
they put it in a money market account or something.
No,
they get a little interest on that.
They just get it back, and that's what a lot of people think. They're like, "Oh yeah, I got a tax return this year. Yes, I did good." But that doesn't mean you did good. It means you made basically a 0% loan to the government for a year or 6 months. But here's the messed up part is that if they give you money back, that's just like, okay, here, you overpaid us. But just like I talked to you about, if you don't pay them soon enough, you have to pay them a fee too.
That's dumb.
So it only works one direction.
That's so dumb.
But they're also in charge, so it is what it is. You play the rules.
I don't know. We put them in charge.
Yeah, it is true. You play the rules that you can, but yeah, that's the way that works. Any other questions on that?
No, I think that's solid. I just wanted to poke the bear a little bit. I know we talked about it before.
I know, it pisses me off.
It's so dumb. It's really dumb. Like, you could put it in a money market account. You know this, right?
You know, I watched a TikTok recently.
You watched a TikTok?
Well, not TikTok. It was on Facebook.
Oh, I'm just giving you business. You don't watch TikTok.
I don't have TikTok.
You didn't even have to.
But it was on YouTube. It was a YouTube short.
Yeah.
I was posting a short and it came up. But it's this young guy and he's basically pretending to be, like, he doesn't know what he's doing. So he's calling the IRS.
Yeah.
He's like, "Excuse me, ma'am. I'm recently out of college. I don't know what I'm doing with my taxes. Can you just tell me what I owe you and I will just gladly pay it?" And then the IRS agent goes, "No, sir, you have to figure that out yourself." And then he goes, "Well, I don't know what I'm doing, so if I get it wrong, is that okay?" And she goes, "No, sir, if you get it wrong, we will fine you for doing so." And he goes, "Okay, well, I don't know what I'm doing, so can you just tell me, so do you know how much I owe?" And then the IRS lady goes, "Oh, yes, sir, we know exactly what you owe." And then he goes, "So I just have to figure it out." He goes, "Yes, sir, figure it out. Good luck." And then hangs up the phone.
That's ridiculous. Yeah. God.
But we have a very complex tax system, and even the IRS doesn't really know because there are so many different deductions and ways that you can lower your tax liability if you know how to do that. So I would certainly recommend to our listener and to anyone else who owns a business or might have some complex tax advice, If you can't just do it through TurboTax, if you don't have just like the normal straightforward, I own a house, I have an investment account, if you start having like rental properties and stuff like that,
Yeah.
go and find a qualified CPA in your area, in your state. For our listener, I would find someone who works with individuals and independent contractors like yourself.
Definitely.
And then final thoughts is congrats again on starting your own business. Stick with it. It takes time to grow. Dom and I know exactly what you're going through right now. I know it's tough, but I can see that you say that's really rewarding, and that is amazing. So we are sending you best wishes from Arizona, and keep up the great work.